Hello, everyone. Welcome, welcome. We're going to get started in just about 1 minute.
Welcome. This is the third in our webinar series. It's focused on the investing core values at Envision Wealth Planning. And those are racial equity, which we did in February, last month, women's empowerment, and this month, environmental sustainability. And I believe Monday is Earth Day. And because I'm an investment advisor, we always have to give you some kind of disclosure. So just know that today, this presentation is intended to be educational in nature and not to be used for direct financial planning or investment decisions. You can hit print screen and read all the
James, could you share the screen, please?
I'm not sharing my screen. Well, that's not good. Okay, now am I sharing my screen?
Screen number 2, please.
Okay, well, then let people know what they just missed. See, that was the do you value environmental sustainability investing? And that's the disclosure that you can print screen. And maybe it's because I'm so excited because I feel like I've got a who's who list of presenters today, including Karen Weigert, Gigi Norcross, and Tony. I'm really having problems with my sharing today. And Tony Fusco, and I'm going to tell you more about each one of them as we get to their section. So today we're going to ask a question. Well, actually, what does environmental sustainability even mean? Sometimes you just hear sustainability. How you can actually vote through sustainability investing, which I equate to advocacy, and how you can implement sustainability investing into what we'll refer to today as the current economy, learn about something that we're referring to now as the new energy economy and a framework for how to think about that, and then take all the information and give you some action points that you can actually do something with. So I thought our first question is, what does environmental sustainability mean? And to help us figure that out or answer that question and related questions, we've got Karen Weigert. Karen serves as the director of the Baumhart Center for Social Enterprise and Responsibility at Loyola University Chicago, where they're focused on the intersection of profit and purpose. At Baumhart, she leads the Scholars and MBA program that's 100% focused on social and environmental impact and broader engagement and thought leadership directed on using business skills to address the challenges of our times. Previously, she served as executive vice president of Slipstream, a nonprofit focused on accelerating climate solutions. There, she led the Chicago office and national finance team. From 2011 to 2016, she served as the first chief sustainability officer for the city of Chicago. I feel better already. Building innovative pathways and solutions to make Chicago even more livable, competitive, and sustainable, including the award-winning Sustainable Chicago Action Agenda, Retrofit Chicago, and the Energy Benchmarking Ordinance. And she brings a broad-based communication expertise to her work, currently serving as the sustainability contributor for WBEC's Reset, where I actually got a chance to meet with her and co-present. And also she's appeared on CBS This Morning, the Wall Street Journal, Chicago Tribune, and Crain's. Now that's a lot of background here, Karen. So how are you going to answer the question, what does environmental sustainability mean?
Well, first of all, thank you for the invitation. It's great to join everyone today and really to think about what the world looks like today and what it can look like tomorrow. Deep in that, of course, is this question of environmental sustainability. I tend to look at the really big picture definition that actually was from Sustainable Development that the UN came out with a few decades ago. But they really say it's about meeting the needs of the present generation without compromising the ability of future generations to meet their own needs. And I think that's kind of a really good macro perspective to keep in mind, because it gives you a little shorthand way to think about where we are today and what's happening. And so if you think about that and you look at something like biodiversity today, where we've seen something like biodiversity declining by 69% over the last 50 years. That doesn't pass that first SIP test about sustainability. When we look at climate and global temperatures, and we look at the hottest temperature on Earth being 2023, and the 10 hottest essentially being the decade before, that again doesn't pass that sniff test of, are we meeting our needs while not compromising the opportunity for future generations to meet theirs. So I think it's a great way to keep that big picture. Lots of specifics that we can look at within that. Climate and biodiversity are kind of good anchor points for that conversation, but always thinking about the opportunities that we have had or haven't had and what we hope future generations will be able to do.
Wow, that's I'm reflecting a bit on that just as you were answering. So, historically, when we've had conversations around sustainability, and I just want to keep saying environmental because some people broaden it, something about the economy usually pops up, often as a counterpoint. So how do you see how this all relates to the economy?
At the end of the day, it's actually one conversation. And it's one conversation because climate risks are ultimately everywhere. There's no part of the economy that is actually outside of that. And when you think about climate risks, big picture, we're talking changes in the weather caused by an overall change in the climate. So heat waves, the growth of heat waves, storms, sea level rise, that has huge disruptive potential for something as basic as food. So I would argue the whole economy is actually in this conversation. Now, certainly you can be more specific about it. There are some parts of the economy where there are specific climate risks, and they may be physical risks in the sense of it's your location is someplace that might flood, or your supply chain is at risk from heat and infrastructure. And there might be climate risks in the sense of transition. As the world moves more to a net zero world, or where there are more policy changes, what might that transition mean for you? So I think there are more specific places where there are climate risks that are more explicit. But then there are also places where opportunity is more explicit too. And those can be opportunities to reduce emissions, companies that are growing while creating more pathways for others to have their own pathway without increased emissions. Obvious examples, solar, wind, the electrical vehicle transformation. But then also organizations that are looking at insurance and pathways for crops and farmers. So big picture, when you think about the macro change that is predicted and that we're starting to see in climate in terms of increased weather events, storms, it's an accelerant instability globally. And instability is not a great thing when we think about the overall economy. So it's in there. The question is how quickly, and that's really going to vary by sector. And that creates both risks and opportunities for people as they're thinking about their own careers and if they're thinking about the economies locally in which they're a part of.
I like how you brought the two together, because I think historically when people were making the contrast argument, they were more focused on the today and not about the future generations, and how even the future was going to be 10 years in the making. It wasn't going to be some time period that was 100 years down the road. So
well,
I'm glad.
Even if you take your 10 years in the U.S., the biggest piece of climate legislation ever is the Inflation Reduction Act. That has about a 10-year time horizon on it. And that's mostly tax incentives and upside opportunities. So even if you take that timeline of 10 years, right now there's a huge infusion that is available for a greener transition across infrastructure all the way down to people's homes. So different time horizons bring different things to the fore, but I absolutely think that that long-term question is always what we have to keep in mind, and then we've got to make it work near term.
All right. We had talked a bit about decarbonizing in our kind of pre-conversation. Maybe first start off by giving us a definition of decarbonize, and then how you see decarbonizing and the economy together.
When we think about the question of decarbonizing, it's really a question of how can we have the economy and the opportunity for growth and decouple that from growth in emissions in carbon emissions. So you're really looking at how can you reduce our economic system, which is ultimately where we live, work, play, and learn, from a carbon emission system. So you want to split those out. So you want to have growth without carbon. And you have to figure out how to do that. We've seen major economies begin to see growth rates for GDP split from growth rates from carbon. Now, you have to look at that globally, because sometimes that is a question of where do your carbon emitting sources come from? Have you offshored essentially? But we're really looking at how you get to net zero. How ultimately do you remove carbon from the economy? And there are lots of examples of people starting to see that, experience that, and then also a stronger understanding of the risks if we don't do that. So I think that's one of the really big questions. There are huge pathways and growth opportunities for organizations now globally. There's things like science-based targets, which allow organizations to chart their own path directly towards the emissions profile that they need to contribute for the economy overall to meet the goals. Obviously, a big picture, the near-term goal is to try to not exceed 1.5 degrees of warming and to really get beyond that. So you really need to look at that fundamental path on splitting carbon out. We talk a lot about the operations. So how is carbon emitted on a day-to-day basis? Now, you've also got to look at how is carbon embedded in some of the parts of the economy. So a building has embedded carbon, and how can you actually reuse that as opposed to rebuilding a building is a great example of splitting out some of those pieces. But big picture, we found a lot of fossil fuels in the ground. We've burned a lot of them in the atmosphere. Fundamentally, we have to figure out how to live our lives, grow our economies without that cycle.
Love the summary there. As the city of Chicago's first chief sustainability officer, what were some of the challenges that you met in that role?
What a privilege, by the way, to have a job like that and to think about our city and other cities creating roles like that. And it's more than a single role. It's how are the opportunities being embedded across complicated, large urban organizations. So it's a tremendous opportunity to have had. And I'm grateful that cities in the US and beyond continue to create roles like that. I had all sorts of opportunities in thinking about that role. And certainly some of it is what is most important? How do you prioritize? And we thought about that a lot in terms of carbon. So really getting the data on where do carbon emissions come from the city of Chicago. Chicago, like many cities, sees the primary source of carbon emissions from heating, cooling, and operating buildings. The second major source is transportation. That actually flips if you look nationally, but in an urban center, we saw that. And then you're looking at equity. Who is receiving opportunities from this transition and who is disproportionately burdened from the situation that we have today, and therefore may also be suffering in addition to not having opportunities. So we had to look at that, that range. And then you try to find really practical pathways. That comes from an extraordinary amount of partnership. And that's both inside an organization like the city and outside, with individuals and groups who've been deeply engaged in some of the challenges and opportunities that sit here, as well as organizations, both nonprofit and for-profit, that are growing. So we translated that into a lot of what we hoped were really practical things that could make a difference. Some of the things that happened when I was in the mayor's office were the launch of the Divvy bike share, the rebuild of the Red Line on the south side of the city, rebuilding, refurbishing parks and playgrounds in every neighborhood across the city, the energy benchmarking ordinance. So I give you those as examples because it hits both transportation and buildings, but also that idea of what's a healthy place to live, work, play, and learn. Now, how does this city and places around the country and around the world where people live meet those multiple needs? And so that idea of nature in the city and some outdoor space is absolutely critical to building community. And making sure that that is equally distributed and people have equal access to the benefits of that is key. So we were lucky enough to be able to do some work in that space as well. So all of that happens with huge partnership, but it's an important one because globally more people live in cities than not, and that trend has been continuing. So the majority of people now are technically classified as urban, so we've got to get cities right. We do many things right here. There's more we need to continue to do.
Well, now I know who I can thank for many of those projects that I've either experienced or driven by. So thank you for that good work that continues to live with the city. So let's kind of fast forward you to your current role now as the director at the let me say that again, Baumhart Center. There are a lot of words in this whole title for you, so I have to slow down. What initiatives are you undertaking there?
As you mentioned, I'm lucky enough to lead the Baumhart Center for Social Enterprise and Responsibility at Loyola University Chicago. And as you mentioned at the top, and I appreciate that, it's a center really focused on profit and purpose. So we're really looking at what are the ways that business skills can help create a better world, or as we like to say, how can we create thriving communities in an inclusive economy on a healthy planet? So we think about those things. And we bring that forward in education programs, in engagement and thought leadership. So as an example, in education, we have the Baumhart Scholars MBA program, and that's 100% focused on social and environmental impact. So all the traditional MBA classes that we need when you're wanting to get an MBA, finance, accounting, marketing, etc., we teach them all, but we teach them with that lens of impact. And the program is cohort based. So you take all of your classes with other like-minded change makers, and it's primarily evenings and weekends. So this is for working professionals. So it's an extraordinary program that opens up transformational change and leadership to everyone across Chicago and beyond, and really gives them the knowledge and the networks to make a difference. So that's an example. We have education programs like that. We launched a new environmental, social, and governance certificate, and that's only 5 classes, but that's for folks who are thinking about this inflection point where there's more and more being asked of companies to transmit data on what they're doing in social and environmental issues. And then how do you both have impact and then communicate that? So that's an example of some of the things that we do. And specifically, we also celebrate excellence. So we have Innovator Awards where we celebrate organizations on social impact, environmental stewardship, and holistic integration of profit and purpose. So we're really looking at those concrete ways to create knowledge and networks so that these broader trends around sustainability turn the right direction, and that we're creating equity in the process so that everyone can both benefit from what might come in the positive way and not be disproportionately burdened by the challenges that we see already.
Well, you've kind of given us a theme in your work where, there's often a balance as we're trying to make these changes and realizing the impact that some people may disproportionately take a burden on. So again, I have to thank you. In fact, one of my friends that I used to coach some soccer for our kids was a graduate of that program. So as I've learned about you, I've learned more about him and what his degree from Loyola means. So thank you for that great work. Now I'm going to turn our attention to how one might actually begin to move this whole thing of advocacy, that I would say that you're an advocate of wanting to see that change, into a place that a lot of people aren't fully aware of, which would actually be in their investing. So I'm going to bring on a return guest for some of you who may have seen prior webinars, Gigi Norcross, who leads Green Century Capital's management, marketing, and business development effort. She helps advisors like me try to better incorporate sustainability investing into the offerings that we provide our clients. Gigi's got more than 30 years of experience in environmental advocacy with a concentration to help direct marketing efforts to individual supporters. And prior to coming to Green Century in 2019, she led a fundraising company serving some of the leading nonprofit organizations in the US. Gigi, glad to have you with us today. So I'm going to let Gigi kind of run her own slides as she tells us more about what it could look like regarding how you can incorporate this advocacy approach into your investing.
Well, thank you so much, James, and thank you for having me more than once on your show. What an honor. I have had the privilege to work on environmental issues really my entire career. To give a little bit of my background, I got started in this space as a canvasser. So I was employed by an environmental organization to go out and knock on doors and talk to people about environmental issues and identify members, and thereby give the organization that I was working for the power to be able to advocate for change. So I did that as a college student, and then, found myself in the fundraising world for a couple of decades. And then 5 years ago, I joined the Green Century team. So my background is not in financial services. It is now, I guess. But really it is about, I have tried to do things in my work that will help to make an impact on the environment so that we can all enjoy a healthy planet for many, many decades and centuries to come. And I joined the Green Century team specifically because I thought that the investment strategies that are deployed through Green Century, and within that, the shareholder advocacy that Green Century does, the work that it does to press for change at corporations on behalf of its investors, I thought that was super impactful, very motivating, and I appreciate that James is giving me the opportunity to talk about that piece. Karen's work is amazing, and she gave sort of macro comments, as well as a lot of ways in which this issue is being impacted and how we think about it and things that we do. The conversation that what I hope to lend to the conversation today is sort of one way a firm like Green Century adds to that larger effort. So a little bit about us. We have been in the business of sustainable investing for more than 30 years. We launched our very first funds in 1991, when this was not a commonplace thing to do. So a little bit ahead of its time, launched the first of our mutual funds. The firm has grown quite a bit since then. It says here on this slide, 183% growth over the last 6 years or so. But we still do what we started out to do, which was to be a family of environmentally responsible and divested from fossil fuels mutual funds, and we remain one of the select few that are in that category in the United States. We do shareholder advocacy, which I will talk about at more length. And then we also are owned by nonprofit organizations. So when Green Century launched in 1991, it was launched by a set of organizations that wanted to provide another way for people to get involved with these issues. So align your investments with environmental issues that you're concerned about, but then also another way to make an impact through that activity. That was the original start. And those organizations who put up the money to start the first fund remain our ownership structure today. So we will talk a little bit about investment strategies and then how that translates to impact. And this, again, is an example of what a firm does. So this is our investment strategies and then how that translates to impact. So we'll start first on the investment strategy side of the line. So this side of the dotted line and how it is that we go about choosing the companies that Green Century holds. And then we'll go to what then we do with those companies to generate impact around the issues. So the first piece of the puzzle is use of ESG data. So in Green Century's investment strategies, in our screening methodology, so how we arrive at companies that we hold in our 3 mutual funds, is that we use data and ESG data and companies need to fall above certain rating benchmarks in order to be included in our funds. So that part of our strategy it helps to manage for risk in the portfolio. Second piece then are screens. We keep a bunch of industries just out altogether. So we do not invest in tobacco, nuclear firearms, nukes. Tobacco, gambling, a set of environmentally dangerous industries are just excluded from our portfolios altogether. We also make use of more positive screens. So an example is that in one of our funds, our balanced fund, which has a portion of it in fixed income, we have a criteria that a healthy percentage of that, and currently it's over 70%, are in green or sustainable bonds, which means that the proceeds that come from those bonds are earmarked towards sustainability projects. So screens is the second part, both positive and negative. And then probably the key thing that the Green Century funds do is that they are divested from fossil fuels. So we are fossil fuel free across all three of our mutual funds. So we think about that in a couple of ways. One is that it's an environmentally dangerous industry that we are divested from. But then also when people invest in Green Century, then they are helping to invest in things like renewable energy. A good percentage of our holdings are in companies like those that generate power from wind. That's a key part of our strategy. Then on the impact side of the line, we think about shareholder advocacy, and then we also think about our ownership structure. So on the shareholder advocacy side, we'll dig in more on this in a second, but we tend to think of our advocacy years as summer to summer. That's a shareholder advocacy year. So we are about wrapping up a shareholder advocacy year. And in this year, we've worked with 60 companies, and those 60 companies have produced 20 new environmental policies that address a number of environmental issues, from plastics to climate to forests. And we'll talk more about some of that in a second. And then I already mentioned that we are owned by nonprofit organizations, only mutual fund company in the United States that has that designation. 100% of the profits that Green Century Capital Management, investment advisor to the Green Century funds, Green Century Capital Management is a business. We do generate profits, and when we do, it flows to organizations that are using that money to run their own campaigns and make impact on a range of public health and environmental issues. Okay, so digging in more on shareholder advocacy all by itself. Key part of what Green Century does for a sense of like resources. Green Century is a relatively small central team, 12 to 15 people that run this company that it generates what we do. Within that, a quarter of those people are shareholder advocates, or people that are charged with identifying opportunities within our companies. So we do a number of things. So proxy voting is one piece. So as a money manager, we can vote on behalf of our investors, and we do that in-house along sustainability guidelines. So that's first. Second is that our team assesses risks and engages companies around those risks that they have to advocate for change, which doesn't necessarily, sometimes that's just a conversation, and sometimes it's implementing work that's already been agreed to. And then finally, we take it a step further to encourage companies first, and then secondly, really advocate for change by filing shareholder resolutions and motivating companies that way. Okay, so what that looks like in terms of a timeline: our advocates do the research. That's the first piece. Then they will file letters with companies that are in our holdings. They will draft proposals, shareholder resolutions on topics that appear to shareholders in financial terms. Those documents have very strict regulations, strict requirements with the SEC. We engage in dialogue. The company responds to the things that we've put in front of them, and we try to get the company to move on the topic. If we're successful, then we will withdraw proposals and then just move to what commitments companies are willing to make. And then AGM is a general meeting. Those typically happen during the spring and summer months. And the proposal goes to a vote if it goes that far, which then, depending upon where the vote lands, it can be motivating to a company to act on a particular issue. We keep track of obviously how many proposals we file. Of those proposals that we file, how many we can withdraw just because the conversation is good. And then we also keep track of the proposals that we file, how many get a majority vote. Because when more than 50% of your shareholders are voting in favor of a particular policy change, while that doesn't require a company to act on that, it's not binding. It can just really lay the groundwork for a company engaging in a way that's different than before. I also have some things, just boiling it down to an issue area where we are spending a fair amount of our shareholder advocacy time, and that is on the issue of plastics. So we can spend just a few minutes on, so we've talked about, here's what Green Century does, here's what the shareholder advocacy thing looks like in terms of resources and timeline, and then how much of an impact can we make on a particular issue. And example that we've got here is in the area of plastics. Major source of pollution in the United States. I mean, some of the statistics here are really quite amazing. And another one that I'll just throw into the mix is that every day the equivalent of 2,000 garbage trucks full of plastic get leaked into our waterways. And that has a tremendous negative impact, obviously, on the environment. Single-use plastics are the key driver behind that. So we're, through our shareholder advocacy work, compelling companies to disclose, reduce, and replace plastic. We have had success with a couple of companies so far this year. Disney being one of them, agreed that in this year they will disclose their plastic footprint and set a reduction goal. Similar policies have been agreed to by a number of hotel chains, Hilton, Marriott, and Choice Hotels. And then Costco, pretty big company, agreed to disclose its plastic footprint for its name brand Kirkland and create a 5-year plastic action reduction plan.
Gigi, I hate to cut in, but I know you've got a couple more slides. If you wouldn't mind, I'd like to move on and we can kind of come back to some of these just in the interest of time.
Sure thing. So the wrap here is that shareholder advocacy, the reason to do it is because corporations have a huge role to play in the betterment and the drive towards a healthier planet. That I've given just some snippets on how Green Century goes about doing that.
Well, thanks a ton. I feel that it was important that we saw the process of how you or how Green Century specifically gets through how they're selecting things for inclusion, as well as then how that you translate that to using shareholder certificates to make further change. So now let me go a little deeper into how one goes about implementing this into your investing, because there's really quite a few elements that I think one has to think about. So first, we're just calling this the old energy economy, and I'm just relating that to more the existing power sources and how we generate things today, how we might be trying to figure out ways to reduce the negative effects as we try to transition to these more new energy types of things, which Karen talked a bit about earlier. Well, when you're investing, often you might have this great idea. If I had all this ability to select, kind of check mark everything, but eventually one has to say, well, how are we going to define what this is? So it could be like, as in Gigi highlighted, well, what if it could be fossil fuel industry exposure, and that might be like the #1 key. But we work with a research company called Your Stake. They use the phrase planet protector, and there's like 5 elements that you see here, which that's how they are defining it in their standard definition of planet protector. That could be one of the ways you screen companies. But there's also a company that calls First Affirmative. They actually have a definition for planet protector that includes quite a few more elements than the one that you just saw from Your Stake. And then there's the UN Sustainable Development Goals. I just took a few from the climate action, clean water and sanitation. So there's just many different ways one can actually look at things. And then the other thing is, well, how do you take those definitions and apply them to how you would end up with a fund or a portfolio? So often it's, there's a benchmark, and, often we're using some kind of index. I'll show you an example of an index in a moment. And then, so there's, say, 4,550 names in that. Then, based upon how you defined your, desire for environmental sustainability, then that generally leads us to fewer names. And then you can do some portfolio optimization, either because you're doing it through financial metrics, or you're doing it because you're trying to recreate an index. And that ends up with some number of companies inside of either a mutual fund, exchange traded fund, or some direct index. But again, it all starts with how one defines it. Now, there are times when, based upon the size of the investment that you have, you may not be able to get all of the things that you want. So you may have to, prioritize your list. So I thought I would use this slide, which is going to give us a comparison of the All Country World Index. Some people might have heard of ACWI, but I always like to say, what does that stand for? All Country World Index, which is about 3,000 companies across the US and globally. And then there's a fossil-free version. Well, this comes from the MSCI website itself. And I found it interesting to note that the blue line is the one that is without fossil fuels, and it actually returned more money. So you could say the growth of, say, $100. At the end, the $100 was now $349 if you were fossil fuel free, and about $328 if you did not. So for some of the people who are concerned that by bringing some kind of screening, that's going to decrease their returns, at least in this particular example, that's not the truth. And I've seen several more examples that bear this out as well. So now I'm going to transition to talking to us about the new energy economy and a framework that was developed that I have really fallen in like with. And I'm going to introduce Tony Fusco to talk to us about that. He has 25 years of investment asset management experience, including bank proprietary trading, hedge funds, the 40X space, that means mutual funds, and exchange traded funds, and venture capital. The majority of his experience has focused on equity derivative strategies and alternative investments. And I'm glad that he's turned his life into the bright side. And now he's found a passion for the energy transition and investment opportunities around this theme through Blue Horizon and the index that he helped to find. How does that sound, Tony? Was that pretty accurate?
That is accurate. And, you know, I think you are right. It's really been the last 5 years that I found the passion for what we call the energy transition, which is creating this new energy economy. And to be honest, you know, my values align with the good work Karen and Gigi are doing, and yourself, James. But I was really pulled into this purely from a market opportunity or market-based perspective. I'm kind of the outlier in our group here at Blue Horizon Capital. We have 10 individuals. All of the others have spent the vast majority of their professional careers in some aspect of the new energy economy professionally. So I'm the only one with a financial services background, as you mentioned. And one of our leaders, one of our partners, is my first cousin, John Mitchell, and 30 years in the industry, from electric vehicles to battery space to the lithium space. And he's been yapping in my ears for 30 years about this coming transition, this coming energy transition. And namely, 4 key factors. One, the growth of renewables in generation. 2, the electrification of transportation and all forms of transportation, not just cars. 3, really being driven by technology and innovation and cost reduction to make these businesses economically viable, even without subsidy. And then 4, just the sheer capital flows and investment that will go into this space in the coming decades. So he's been yapping and yapping in my ear, James, for my whole life. And I always viewed the opportunity from public investor, an investor in public securities, and it was always too early. There were not enough vehicles to express an opinion. I didn't think it was quite there at the inflection point, too much in the infancy stage. So he got to me 5 years ago, and we did some venture investing in the space, really in the battery space and in some of the critical material space. And one of the ventures we started was Blue Horizon Capital, to be a creator of products for investors who want to get exposure to this theme and believe in this theme, this energy transition, creating new energy economy. And our belief system is really simple. We think that you know, the way the world is consuming, storing, delivering, generating energy, it's changing. It's growing rapidly, and investors need sensible and efficient exposure to this theme. And we think it's a multi-decade thematic growth story, analogous to, you know, internet revolution in the early to mid 90s. And we think there's a host of tailwinds and drivers. In our belief system, it's really technology and innovation and cost reduction as the key drivers. And then obviously public policy support is a big tailwind. Citizen advocacy groups, corporate advocacy groups, demand for energy is growing in general. Demand for sustainable energy is growing. So looking at it from just purely a market-based perspective, always looking for a theme or an investment strategy which has legs, which has longevity. And to me, this is one clearly that 20 to 30 years lifespan as this transition unfolds, and it should produce returns that in our view will be in excess of the S&P 500 if done correctly. And I know you've
If I
switched
could, if I could
yeah.
just interrupt here for a moment. So, I just want to let people know why I was excited about what I saw and kind of get into some of the things I think you've already said. So, for years I've heard of solar. I've heard about wind. I have a friend that has been in the e-car and e-bike space for quite some time. But to actually, take all of those ideas and kind of put this in terms of a framework, which then kind of led to an index. So for those not fully familiar with indexes, you try to find some commonality amongst things. The S&P 500 is the one that a lot of people have heard. Standard & Poor's 500. It's simply the top, largest 500 companies in the U.S. by their market capitalization. So it's just a rank order. There's not a lot of selection inside of that. That's kind of how it gets developed. So the fact that you could, look at this emerging space that has been emerging, he's been yapping in your ear for a while, and that eventually your team, gets assembled and creates this framework that I'd like for you to enlighten us further on how you got to the framework and I guess some of the subcomponents of the framework.
Sure. So initially, we surveyed the universe of product offerings, and we thought there was a gap in the marketplace in the sense that there are a lot of products that are very segmented or focused on one particular aspect of this new energy economy or a couple of these segments. But we wanted to produce an index ETF product that was benchmark-like, very broad, unconstrained, and represented holistically the entire new energy economy that's being created. So for us, it comes down to 5 key segments. And it's all the way from how this new energy is generated through to the end use, the application side on e-mobility. So these bookend segments, generation and e-mobility, I think most investors and people are familiar with these bookends because they see it with their eyes. They understand solar, wind is growing. They see the application side, EVs, cordless power tools, e-bikes, as you mentioned, et cetera. But in the middle 3 segments, there's a lot of goodness and a lot of interconnection. So how energy is stored, the components, the subsegments to that segment. What are the critical materials that are sort of the choke point to this entire value chain? These are not commodities the way we traditionally think of commodities, James. So we view them as specialty chemicals. They are materials that are produced to a specification for battery cells or battery makers. So do not view them as, iron or a commodity like that. And then how this new energy is distributed. Efficiency is such a big part of this new energy economy. There's so many losses along from production through transmission to end use. So that's a critical component of the framework. So for us, the value is we use our industry knowledge, our industry experts to create this framework, to create these subsegments, and then the corresponding weightings that we want in each of these subsegments. So this index rebalances twice a year, March 1st, September 1st. The team has a pretty robust consulting practice. So they have clients literally in every one of these segments. So there's a lot of information gleaned from access to not only the C-suite of leaders and innovators within this framework, but also engineers, commercial personnel, et cetera. So I think one of the biggest edge that we have is sort of this industrial knowledge, this team of individuals that have worked all throughout this chain and helps to stay on top of what are the innovations, what are the subsegments we need to add or delete when we do a rebalance. So, intuitively, I think investors understand the framework. And this graphic you just flashed to just shows the underlying 100 constituents. So our index is 100 names, 1% equal weight at reconstitution. And it's going to be balanced within each of these 5 segments. No less than 10 names, no more than 30. Like I said, 1% weight. And it's a geographically unconstrained. So Asia exposure, Europe, Africa, and the Americas. Market cap, small, mid, large. Highly diversified within the theme. And goal really meant to be a core or a base level exposure for investors who believe in this theme, and then supplement this holding with areas that you have particularly strong conviction in. You know, example we gave James is if this index ETF product is your core exposure to the new energy economy, but you really love solar, you know, supplement by buying single name solar or TAN ETF because you want to have a heavier weight in solar. We want to maintain sort of this balance and holistic framework to capture the entirety of the theme. And you know, we've been happy over the last 3 years with the results. I mean, obviously, it's been a trying period in the equity markets the last 3 years for the new energy space and clean tech, but we felt that the performance relative to peer group and other products has been very strong, and you know, we continue to try and educate and appreciate, you know, opportunities like this to share this framework.
Well, you know, thanks for giving us this broad knowledge of this new energy economy. And, you know, I like this slide because I could actually see some names that look familiar and some names that looked unfamiliar, you know, categorized in the way that it fits that framework. So, but please hang around because there may be questions for you at the end and the rest.
And James, it's great you mentioned that, because I think investors will be shocked if they actually look under the hood and see who these companies are. A lot of times there's this bias or that these are pre-revenue companies, these are really speculative companies, et cetera. And it's really not the case. If you were to compare these holdings to the S&P 500, it's better on a growth and almost every growth and value metric compared to the S&P 500. So you have leaders within the energy transition and new energy economy. And I think because we are at that tipping point where we're entering from infancy stage to sort of a 20-year expansion phase, you have some very profitable and growing companies. So I would urge people to look under the hood like you suggested.
Well, because I do these webinars, I'm thinking I'm creating smarter investors. But let me get to this section around taking us from information to action. So I'm going to show you a comparison to Vanguard funds. I pick on Vanguard because they use indexes that generally don't screen other than for what the high-level part of the category is. So the first one that I have is the Green Century Balance Fund versus the Vanguard Life Strategy Moderate Growth Fund. So on some key metrics like clean energy companies, fossil fuel industry, deforestation, and toxic water pollution, it's near 100% better in every category. Sorry, Gigi, there was one that was just 80. I was hoping you'd get all hundreds on the exam. Now let me show you one that comes from what we offer everyone who shows up to our webinars. We have a software provider named YourStake that actually I'm pulling this from, where we can do an analysis of your existing portfolio, or if you've got some other ideas that it might make sense to use this. So in this case, I use the values of the Sustainable Development Goals around climate action, clean water and sanitation, and affordable and clean energy. And you can see from the bars that the Envision Justice Standard which is a 65% stock, is doing better in those categories against that life strategy fund. Then we look at the returns. Oh boy, I guess they beat us for 1 year, but I believe in persistency. So you'll see persistently on the 3, 5, and 10-year that this portfolio, which, you know, in those categories has been doing better than the life strategy, because we're actually screening for those things. And then volatility. So think of volatility as the thing that is that up and down in the roller coaster. And the more you go down, the more your portfolio has to work harder to get back to the prior levels. So you want to try to keep that moderated. So I'm happy to see that we're doing better in volatility. And well, there's a little disclosure because again, I didn't create this. This came from your stake. So with Envision Wealth Planning, we've got several ways to actually help your investing from, you know, in this chart just basically saying, depending upon the dollar amount of your investment, gives us more solutions that we can bring to bear. On occasion, people have something smaller. So we do, you know, support some individual funds, be they mutual funds or exchange traded funds. And the portfolio checkup, that was the sample that I showed you earlier. You can use this QR code, or you could email us, and we'd love to provide that analysis for you. So if I could ask our presenters to, you know, put their lovely faces back on the screen, and we'll check to see what questions and answers or questions we have in the Q&A. So JD Barrow's gonna help us see what we may need to answer and figure out who the best person to answer the question is.
Yes, absolutely. Thank you, Gigi, Tony, and Karen, and of course, James, for presenting all this information to us today. I should have mentioned at the beginning, we do have a Q&A. All the attendees can slap those questions in. Go ahead and get yours in now, and if we don't get it to them in the last couple of minutes, then we'll email out the remaining ones. So we had this one question with a few others, but I'll go ahead and start with this one. We are hearing about this transition into the new energy economy, but how do we know for sure it's going to happen successfully? A lot of companies make a lot of promises. What about something like greenwashing?
Well, greenwashing is real, but what I'm hoping that we did earlier in the presentation is to begin to establish what the definition is. So if it's a mutual fund company in particular, we want to ask them how are they defining it? And let's not be fooled by titles, but how are they defining it? That's one reason why we used your stake and other research to help us kind of look over what their claims might be, just that we can feel good that those claims are actually in line. I'm thinking, you know, one of the things that I like about, I'm just going to pick on Tony's offering right now, is that we're not trying to pick a winner per se. It's 100 names. They were looking at all kind of different names. So there's 100 that are included. So not trying to necessarily, you know, guess specifically what answer, but, you know, you see that Blue Horizon has a framework, and I'm sure that Tony or someone on his team would be willing to tell you more about one that fit inside of that. And there may be some as well, you know, in the case of Green Century, which primarily, you know, I just know that they've been fossil fuel free. There might be some other screens too. So an individual company, you know, we kind of look to, you know, our mutual fund and exchange trade fund providers, as well as some research that we do just to help people not find themselves being greenwashed.
Yeah, and James, just that I see the question from Deb. You this term energy transition tends to scare people off a little bit, but there's nothing new about energy transitions in the United States or globally. In the last 200 plus years, this is what we consider our fourth energy transition. In 1800, the United States derived 99% of its energy from burning wood and manure. And invariably what happens is there's a new technology, there's a new source of energy, and then third factor, cost of that new source of energy. And these transitions happen, and they happen over many decades, whether it's the coal, oil and gas, nuclear, and this is the renewable transition. So it's happening. The transition is happening. It's really about pace. And I like to, throw 4 questions out to people when you're considering whether you want to invest in old energy or new energy. And the first is, where do you think capital flows are going, especially for infrastructure, new or old energy? Where do you think innovation technology is going to have the greatest impact in the future? Where will the growth be? And then 4th question I ask is, where do you think the global public policy support will be? And to me, it's obvious that it's new energy for all those questions. So it's not really about whether or not the train has left the station. It's a question of pace and rate. And no one really knows, right, the answer to that. But, I think you can affect that rate and that pace by putting dollars to work. That's one thing we know.
I just want to see if Karen has something to add on, as you're looking at the innovative leaders and a bunch of other things in Baumhart.
Yeah, I appreciate the framework, and I think it's an incredibly important question. At the same time that we're asking about greenwashing, we're actually also hearing about green hushing, which is actually some companies doing work that they are a little more reluctant to talk about. So we just have to watch the communications actually on both sides of this. I always look for what's something that gives us an indication of where we're heading, and I appreciate Tony's comment that the timing and the pace is critically important to understand. And when you're investing, that's actually really important, unless you're a longer term holder, which is a different time horizon. It's that the newest forms of electricity going in globally have been renewables. That's been the driver in the last several years. And so when you think about that as a global play, it's a nice indicator of a fundamental transition that isn't just taking place in one part of the world.
Well, I see that we're over time, but I may have a reputation for trying to fit too much in an hour. There's plenty of conversation that we can have in the future. So, please email us. We can, try to get your question answered by the best person here. We appreciate everyone who either saw it live or is seeing us on the replay. And tell your friends and spread the word. That's how we're going to make the change. Thanks again for everyone's time.
Thank you again, everyone. As a general reminder, this is part of a larger ongoing series, Envision Money Making Sense. This was part 3 of a 3-part series dealing with race, gender equality, and now planet protection. So happy upcoming Earth Day to everyone. Thank you again, Gigi, Tony, and Karen, so much. And we will see you all next month for the next Envision Money Making Sense. Please go ahead and register and send this to everybody. Anybody who registers will get the recording, whether you show up and watch us live or not. We love to have you, but we care about your education about these topics more. Everyone have a great day.